Welcome to the Explainer. Today we're going to take a pretty dense SAP technical guide and completely transform it into your ultimate interview playbook. Look, if you're aiming for a role as an SAP FICO functional consultant, you already know that grasping the mechanics of manual postings, it's totally non-negotiable. So we're breaking down the exact practical knowledge you need to absolutely nail it. Okay, let's just dive right into this guide. It's specifically designed to arm you with the real-world, scenario-based knowledge you actually need to ace your next technical interview. And honestly, whether you're dealing with a legacy SAP ECC system or gearing up for a shiny new S/4HANA environment, mastering these accounts receivable and accounts payable modules is literally going to be your bread and butter. So, here's our game plan for today. We'll start with number 1, the basics of FB70 versus FB60. Then, number 2, real-world business scenarios. Number 3 covers mandatory master data. For number 4, we're going under the hood with configuration. Number 5 is end-to-end processing. And finally, number 6, we'll wrap up with troubleshooting and interview tips. All right, Section 1, the basics. FB70 versus FB60. Let's build that absolute foundation and look at the two sides of our manual posting coin. What's really cool here is how perfectly these two mirror each other. Over on the accounts receivable side, FB70 is your absolute go-to for posting a customer invoice manually. It handles the customer debit, the revenue credit, and takes care of your output tax. Then you flip the script for accounts payable. That's where FB60 comes in for manual vendor invoices, handling your vendor credit, your expense debit, and of course, your input tax. Now listen up, because you're going to want to commit these specific posting keys to memory. Interviewers absolutely love to test if you know the exact numbers driving these transactions behind the scenes. For FB70, you've got a debit key of 01 for the customer and a credit key of 50 for both revenue and output tax. On the flip side, for FB60, your expense debit is 40, your input tax debit is also 40, and that vendor credit, that's a 31. Seriously, pin these to your mental vision board. They are fundamental. Moving on to Section 2, real-world business scenarios. Knowing the definitions is great, but the real trick is knowing exactly when to use these T-codes in a live business environment. Picture this scenario. Let's say ABC Corporation provides consulting services worth $10,000 to a massive client like Walmart. Finance is going to post this invoice manually using FB70. But why? Well, crucially, it's because this transaction originated entirely outside the SAP Sales and Distribution module, SD. Since there's no sales order or delivery document flowing over from SD, finance just takes the wheel. They manually debit the customer and credit the revenue. And on the flip side, when do we use FB60 for accounts payable? You use it when a vendor invoice comes in manually and there is absolutely no purchase order or goods receipt tied to it in the system. So you completely skip the standard MIRO transaction, because that needs a PO, and you use FB60 for everyday operations. Think about things like a monthly electricity bill, office rent, telephone bills, or maybe legal fees where standard POs just don't exist. All right, Section 3, mandatory master data. Let's see what kind of foundational data we actually need before we even attempt to make a posting. As you'd expect, both transactions need some baseline organizational data to even function. You absolutely have to have your company code, tax codes, posting periods, document types, and number ranges active. But take a close look at FB60. It has some really strict requirements on the controlling side, specifically cost centers and profit centers. And this right here, this is a super common interview trap. Here's how it usually goes. An interviewer will ask you why a cost center is mandatory in FB60 but usually not required in FB70. You confidently tell them it's because expense accounts in AP are typically set up as cost elements. If you ever forget to assign a cost center during an FB60 posting, SAP will instantly throw this exact error at you. Account requires assignment to CO object. In FB70, though, revenue normally rolls up to a profit center, making the cost center optional unless, a specific company policy says otherwise. Moving right along to Section 4, under the hood, configuration. Let's pop the hood and check out the actual configuration paths you need to set these modules up. Think of this as your essential configuration toolkit. Interviewers definitely want to know if you can navigate the back end, so you've got to know that document types are defined over in OB7. Number ranges live in FBN1, and your posting period variants, those are controlled through OB52. Plus, you assign those critical reconciliation accounts directly in the master data, using FD03 for customers and FK03 for vendors. Though, quick side note, if you're working in S/4HANA, you'll be managing all of that through the business partner, or BP transaction instead.
We really can't talk about configuration without bringing up document splitting. It's a hugely powerful new general ledger feature. If an interviewer asks you to explain it, just break it down like this. Imagine an expense in FB70 needs to be split between two different departments, say the IT cost center and the HR cost center. SAP will automatically create split documents in the back end to balance those entities out. This is absolutely essential for keeping your IFRS reporting accurate across segments, profit centers, or business areas.
Okay, Section 5, End-to-End Processing. Now that we're configured and our master data is locked in, let's trace the full linear journey of these transactions.
On the accounts payable side, it is just a beautifully logical flow. Step 1, you receive that manual vendor invoice. Step 2, you jump in and execute your FB60 posting. Step 3, boom, this immediately creates a vendor open item in the system. From there, Step 4, you generate a payment proposal. And finally, Step 5, you run the automatic payment program using transaction F110, which pays the vendor and officially clears that open item right off your books. Now, the accounts receivable side definitely mirrors that journey, but with slightly different tools. Step 1, you start with the customer invoice. Step 2, you hit FB70. Step 3, that generates your customer open item. But here's where it pivots a bit at Step 4. You actually use transaction F-28 to manually log that incoming payment from your customer. Then in Step 5, once that cash is registered, the customer is cleared out and you move right along into your final bank reconciliation.
And that brings us to our final section, Section 6, Troubleshooting and Interview Tips. This is the stress test. This is where interviewers want to see if you can actually fix things when they inevitably hit the fan in a live production environment.
When your interviewer throws a scenario-based curveball at you, like say troubleshooting an incorrect tax amount in FB70, first of all, don't panic. Just take a breath and lean right back on those fundamental configurations to build out your answer.
You'll want to systematically walk them through your checks. Start by verifying the tax procedure. Make sure the tax code isn't missing or just flat out misconfigured with the wrong percentage. But don't stop there. Check for other really common hiccups. Is the revenue or expense account somehow blocked? Is the posting period actually open in OB52? What about the vendor or customer master record? Is that blocked? Or maybe account determination is incomplete. Showing them this kind of step-by-step analytical approach proves you're a true consultant, not just somebody who memorized data entry. Ultimately, they're going to ask things like how you'd resolve a double payment, or how you'd handle sales and use tax during a US implementation project. Why? Because they want to assess your grasp of real-world integration. They absolutely need to know that you understand the entire breathing AR and AP cycle and haven't just memorized a list of T-codes. So I'm going to leave you with this final senior-level question to really chew on. During a high-stress month-end close, what specific checks do you perform on those open AR and AP items right before the financial statements are finalized? Like, how confident are you in auditing those items before the books officially close for the month? Master the end-to-end flow we talked about today, and you'll have that answer ready to go. Thanks so much for joining me on this explainer, and good luck out there on your SAP journey.